Ladies and gentlemen, 3 minutes past 10 CET. Apologies for the delay. Welcome to our first Surety Week, and the one who is doing the welcoming word is our president, Kai Scholz. Now, Kai couldn't be here today due to some family circumstances, so we have a recorded message from him, which I shall play now.
Good afternoon. My name is Kai Scholz, and I'm the current president of ICISA. It's my pleasure to welcome you to the opening of the first ICISA Surety Week. ICISA members combine almost 95% of the trade credit and a significant amount of the surety premium worldwide. With this, ICISA is the only worldwide acting organization for private trade credit and bond insurers and reinsurers. As well as credit insurers, sureties have been even more important than usual in the COVID-19 crisis. Insurers and its reinsurers who provided their bond capacity protected and enabled, among other, the progress of large infrastructure development projects and provided security and trust in turbulent times. Therefore, surety is an inevitable part of ICISA, the International Credit and Surety Association, and should be regarded on eye level with credit insurance. These facts let the idea grow at ICISA that we want to introduce a format exclusively for surety. And now, here it is, the ICISA Surety Week. It is probably quite unique when the upcoming days will bring that many people of the worldwide surety industry together at the same time. 600 plus registered participants, 26 speakers and panelists from different countries and various continents in 8 sessions are the facts and figures for this week's event. The number of participants confirms that the demand for knowledge exchange about surety-related topics is high. And people linked to the surety industry look for formats to get in touch with other surety experts. We at ICISA are overwhelmed by the high interest from all of you. Thank you for joining. Let us try to establish something new, which can and will hopefully be repeated in future years. ICISA experienced many changes over the last 2 years since the pandemic broke out. A new management, new offices, and various refurbishments behind the scenes in respect of equipment and processes happened. The core purpose has not changed: to serve members by advocacy, public relations for our industry, and the sharing of best practices. While the purpose had not changed, the current situation forced ICISA to realign its focus a couple of times. Until October 2021, we made loads of efforts to put our industry into the right light at many political and economic institutions to show which advantages credit insurance and surety bonds have in the crisis. This will go on. But with a physical meeting of ICISA members in Seville, we put also members and the networking approach back to the center of our work. People were hungry to network in person again. All the hope we had for a continuation of meeting in person vanished with Omicron, and we had to rethink the start in networking for 2022. Therefore, it's my pleasure to welcome you to a world premiere, the first virtual ICISA Surety Week. With this event today, we are opening to the world and bring global surety expertise together. To cover most of our guests' time zones, we will host 2 sessions per day. All of them touch up-to-date topics and are presented by great and highly experienced speakers and panelists. Right after the opening, we start with Sean McGrotty from Euler Hermes and Eric Jan Röver from Stichting Garantiefonds Reisgelden, who give a general market overview and tell us about the latest development on travel guarantees in the Netherlands, as well as the resilience of this product in catastrophe scenarios. This afternoon, Susan Kearney from the Institute's RiskStream Collaborative talks about how to become tech pioneer in surety explicitly via the blockchain approach. Afterwards, Gustavo Krieger from ICISA member Fianzadora Insurance gives us an overview about current developments in surety in Argentina. Tuesday's panel is for sustainability in surety. ESG topics are all over the place. ICISA and its members and their products cannot escape. We have to address it. So ICISA's advocacy expert Daniel de Burka will discuss with Pamela Schirmans from IOPA, Martin Staude from Swiss Free Corporate Solutions, and Giel Lindhorst from Partnership for Carbon Accounting Financials, PCIF, how surety can contribute to a green future. A further outlook of what the surety industry will be faced with is undertaken by Marlene Hertel, head of Surety International at AXA, and current head of ICISA's Surety Committee. Magdalena Caro, senior underwriter from Euler Hermes Re, will present the Suretypedia glossary afterwards. So old the next discussion is, so new it is. Surety bonds versus bank guarantees. This always-on topic is moderated by Jos Cohn from Liberty Surety. Jos will discuss with Juan José Montes, Director Surety at Solonion, Mirjam Weitenberg, Head of Asset-Based Finance at Deutsche Bank, and Henk Riedijk, a well-known surety expert and surety buyer. The second Wednesday session moves the focus to Canada. Richard Hazlitt, Head of Surety Europe from Travelers, Dave Smith, National Vice President from Intact Canada, and Joe Shaw, Senior Market Executive from the International Underwriting Association, IUA, discuss what lessons can be learned, maybe even in Europe, from bonding practices in Ontario. Moderator for this session is Steve Ness, President of the Surety Association of Canada, SAC. With surety in emerging markets, we address future opportunities for the industry on Thursday. Next to India, our panelists will address markets like Sub-Saharan Africa and Asia. Our experts are Vikash Khandelwal, CEO at Icaro Surety, Johnny Simmons, Director International Bonding and Insurety, and Thomas Kessler, Disaster Risk Insurance and Finance Specialist at ADB, the Asian Development Bank. This panel is moderated by the current president of the Pan American Surety Association, PASA, Adrian Curl. Finally, we will close on Thursday afternoon with strong women in a strong industry. The best would be if we do not need it soon anymore, as it becomes normal to have an equal number of women and men working in the industries represented by ICISA. But of course, for now, it's a real pleasure to have them on board for this conference. Annette Roth, Head of Surety at Credendo, Jennifer Klein, Senior Surety Underwriter at Swiss Re Corporate Solutions, and Marita Kramer, Member of Supervisory Board at Euler Hermes Group. They just talk of the daily work, women in surety and everything linked to it. Altogether, we will have a broad lineup of topics for an entire week. I hope you have all found your favorites or will find them shortly. We will send you a survey after the sessions. Please return it to us for us to improve the quality and meet your needs in the future. My special appreciation and thanks go to all speakers, panelists, moderators for the contribution, and to the ICISA team on the Schiphol, which organized the event. I look forward to meeting the members during the ICISA week from May 31st to June 4th in Helsinki, and all of you joining the ICISA Trade Credit Week in autumn. Dates will follow shortly. Now, please free your mind and share your ideas and opinions about surety. Enjoy the next couple of days.
Well, thank you, Kai. I'm going to ask Sean to switch on his camera. He's been having some technical difficulties. And Sean, I'm not sure if it's working yet. So I would propose to give you a little bit of time to go to Erik Jan Reuver first. Erik Jan Reuver is the responsible for SGR in the Netherlands, Stichting Garantiefonds Reisgelden, Don't Try This at Home. And he will be talking about travel bonds, travel guarantees in an extremely challenging market at the moment. So please give a warm welcome to Erik Jan, please.
Good morning, all. Is everybody hearing my introduction?
I'm not sure we can hear you, Erik Jan.
Hello, can you hear me?
Yes, we can hear you fine.
Oh, great, that's fine. Good morning, all. My name is Erik Jan Reuver, and I work for the Stichting Garantiefonds Reisgelden, a real tongue breaker, as Richard already announced. We are founded and seated in the Netherlands. We are a Dutch travel guarantee fund. I will inform you and brief you a little bit about what we do as a niche fund in the Netherlands in the travel industry. And if you have any questions, please feel free to ask. I will share now my presentation with you. One moment, please. I have to. Okay, Richard, I can see in the notes that only the organizer is able to share my presentation. So can you put it on the screen, please? Hopefully, Richard can assist me with the presentation because I'm not allowed to put it on the screen.
Just a second, Erik Jan, it's coming now.
Thank you. Let me first start and informing you a little bit about SGR and who I am. But I wanted to start with some observations as a non-ICISA member. These observations are from my mother. As an outsider, she told me most of us are chronically overinsured. We throw away money trying to protect ourselves from remote risk. The insurers are the only ones profiting from this. And also she learned me insurers have been successful at two things, making money and getting the public to believe they are essential. So working in the guarantee industry, this is a little bit contradictory to what my mother said, but this is always fun to start with. I am a certified public accountant. I worked for KPMG for more than 10 years. I was a chief financial officer within the hospitality branch since 1999. I worked 10 years for all kinds of companies related to travel industry. And I am now working more than 10 years as a managing director of the Dutch Guarantee Fund. I see now a presentation on the screen, but that's not mine. That's from Sean, I think. Yes, that's mine. Thank you. Can you click through the next sheet? And I'm also a registered business valuator and a member of some supervisory boards in the Netherlands. And I am board member of the Dutch Arbitration Institute. We can go to the next slide, I think, about SGR. SGR is founded in 1983 by the Ministry of Economic Affairs, together with the branch organization ANVR in the Netherlands. and we act as an independent guarantee fund towards consumers, and we provide coverage based on the Package Travel Directive in the Netherlands. And the Package Travel Directive is a EU rule and regulations related to package travel. When you sell a package, you are obliged as a tour operator to provide coverage towards consumers in case you are asking prepayments on the travel. We covered in 2019 for about an amount of 5.8 billion in terms of turnover from our customers, from our tour operators. And this is, of course, not the whole risk we have, but this is an indication of the total market in the Netherlands. We cover, I think, about 99% of all travel in the Netherlands when it's packaged. And we are not considered to be an insurance company, but we are more working as a surety company towards consumers. We have a exemption from the Dutch central bank, but we still have some activities related to Solvency II, which I will explain a little bit later. To have an idea about the size of the fund, we have a total capital and reserves of 100 million at the end of 2021. And we have bonding in place received from tour operators, which amounts to about 250 million. And when there is a financial failure in the market and we have to repay consumers, we first start to use the bonding from the specific tour operator. Secondly, we have some reinsurance in place with our own captive, which I will explain to you a little bit later. And thirdly, the third line of defense is our capital and reserves. If necessary, we have some reserves in place to have additional funding to repay the consumer. The fund was built between 1983 and 1999 by a levy paid by consumers on every booking, and we started to make the guarantee free of charge since 1999, and this happened until 2021. And due to the COVID crisis and lots of guarantees we had to repay towards consumers, we levied a €5 per booking per person since February 2021. And this is collected by the tour operators. They have to put a €5 levy on an invoice every booking is made, and they have to pay the guarantee fund. We are also measuring Solvency II on a voluntary basis. And our Solvency II ratio at the end of 2019 was 250%. But due to the market situation in the travel industry with COVID, our solvency declined towards 131% in 2021. At this moment, we are looking into means to, of course, to increase the Solvency II ratio. Of course, it helps that we have a levy of €5 per person, but also we are looking for additional backups, and we have some guarantees also in place from the Dutch state for excess losses if they occur. Currently, we are covering 650 Dutch-based tour operators and travel agents or chains of travel agents for insolvency protection. We are only covering tour operators with a seat in the Netherlands due to our articles of association. Every country in Europe has a kind of a guarantee fund. Some are organized by commercial insurance companies, and in other countries, sometimes it are state-run guarantee funds. And in our case, it is more a private fund with involvement of the government, but also from the trade itself. Besides SGR, we have also another fund in place, which we call SGRZ, which provides guarantees to the business travel market. And we run a Calamity Fund, which covers extraordinary coverage by calamities in case of a calamity in the case a consumer is traveling. I will explain that later also a little bit more to you. The Calamity Fund has a capital of 550 million euros. The funds we are that are run here in the Netherlands by us are approved by the Dutch consumer authorities and are exempted by the Dutch Central Bank based on specific exemption rules. In case of a huge calamity, for example, the financial failure of Thomas Cook, we work with external claim handlers and we scale up to make sure that we can repay consumers. How does our risk model look like? I will explain a little bit to you on the next slide. Thank you for sharing that with us. The risk model we have is pretty simple. Based on a yearly assessment, we receive the financial statements, audited financial statements from the clients we have, and we make an individual assessment of the risk. Basically, we assume that if the participant, the tour operator, has at least 20% share capital and reserves and a positive working capital, then we request a bonding over the turnover of 1.5%. And if these criteria are not met, the bonding we are requesting is between 5 and 10% of the turnover. And it depends on the business model and some other factors. And these percentages are related to the historical damages we had to cover in case of a financial failure. And if a company is meeting our financial criteria, the 1.5% turnover, the bonding in terms of the turnover is a minimum level. We cover, in case of a financial failure, the package travel. We cover linked travel arrangements, and we cover standalone hotel and car rental agreements, being not part of a package. Explicitly, standalone flight tickets are excluded from coverage because of the high risk with airlines, and because this is not a necessity by law to cover standalone flight tickets, which in the future it may change, but at this moment this is only applicable for package travel. All information we receive from our participants are processed in a CRM application, and based on a yearly assessment, we calculate the risk, and we will provide a letter towards our customers, and consumers can claim via a portal when they have damages, and this is all connected with our CRM application in Microsoft. We are always interested in a level of reinsurance, but at this moment, since 2004, we had no reinsurance in place, no external reinsurance, to be quite specific. Before, we had some coverage from Munich Re, but after 2004, with a huge increase of premiums, the search with the help of AON was not very successful. And recent premium proposals we received were for 2 million premium, and then we received a coverage of, could receive a coverage of 10 million above 10 million, which is not very interesting for us. This is considered to be extremely expensive. Yeah, we concluded that there is no appetite from the reinsurance market in the travel industry at this moment. And we started our own captive already in the year 1996 with a captive seat in Curaçao, Dutch Antilles. And I will elaborate a little bit on this in the next sheet. The captive is 100% owned by SGR, and the seat in the Dutch Antilles, to be more specific in Curaçao, Curaçao has a specific regime for captives. There are more captives from Dutch insurers seated in the Dutch Antilles. Our captive has an own capital of approximately 50 million and is managed by local insurance experts. Since 1996, we have seen that we have gained lots of benefits from this with a huge expertise built up there. Of course, we pay at arm's length a premium towards our captive, but the results of the captive are, with the tax ruling, very reasonable and quite better than taxed in the Netherlands. In our captive, we have a coverage in place which is at this moment with a stop loss of 25 million, which means that if we have more damages in a year than 25 million, the captive will repay us for an amount of maximum 15 million euros. Our captive also provides services towards other guarantee funds. If there are any questions, please feel free to share with us with the chat function. I hope I receive some questions also today, and if necessary afterwards, I can answer your questions by email. This is the next slide is about the Voucher Fund, which is something which occurred in 2020 after the COVID crisis, and which made sure that we could reduce our risk in the travel industry due to major travel bans and booking cancellations. Our clients had major repayment obligations towards consumers, and to avoid a bankrupt, to avoid major bankruptcies and bank runs, we set up a system of travel vouchers with a guarantee from SGR. This helped enormously to avoid the repayments. If we were not able to set up this system of vouchers and a voucher fund, I think that 50% of our clients would be already bankrupt. And at this moment, only one major travel agency, Reizen, went bankrupt in the Netherlands. And in case of bankruptcy percentage of 50% in 2021, we would have faced, I think, more than 200 or 300 million euros in terms of damages. The voucher fund was raised together with the government, and the finance of the fund was provided by the Dutch state with loans of approximately 400 million euros. And the loans were granted in 2021 based on the rule that a voucher which should be repaid to a consumer could be financed by us after 1 year, so that the tour operator had some liquidity to repay the consumer. And this system was very successful, and what I already said, this prevented major losses in the Dutch travel industry. I think this was a special situation, which hopefully in the future will not occur again, but it helped us enormously to avoid major losses in the market. Then I would like to elaborate a little bit on our Calamity Fund, which is founded in 1999 by SGR and the Dutch tour operators. And the Dutch Calamity Fund provides extraordinary coverage in case of a calamity for extraordinary expenses. And these calamities must be related by unexpected and abnormal situations, such as a molest situation or nature disasters, such as a hurricane or an earthquake, and a traveler traveling with a participant should be repatriated. And in this case, the extraordinary expenses are covered by the Calamity Fund. The consumer pays €2.50 per booking for this coverage. And since the start of the fund in 1999, we covered more than 200 calamities. and we paid approximately 40 million in terms of damages towards consumers, with an average yearly amount of 2 million. And the funds, the SGR, but also SGRZ and the Calamity Fund, they form an administrative union together. All right. This was basically my presentation on the Travel Guarantee Fund in the Netherlands. Are there any questions I could answer?
At this moment, Erik-Jan, you were extremely clear. There are no questions.
Thank you.
But we will be sure that if questions do appear to relay them to you.
Okay.
So we can do an answer at a later date.
Great.
Thank you very much for the presentation, and thank you for showing that bonding or guarantees can save an industry in times of need, as we had in COVID. In the credit insurance sector, the government did a lot. In travel guarantees and bonds, governments did a lot less, I must say. And SGR, as we saw, basically saved an industry, and I thank you very much for that.
Thank you.
Any questions at this point? I don't see any. I just see that it was perceived as a very good presentation. So Erik-Jan, thank you very much.
Thank you.
And we shall move on to Sean and see if Sean was able to switch on his camera again.
Good morning, Richard. Good morning, everyone. I hope you can hear me loud and clear.
We hear you. I'm going to put your slides on screen.
Okay, thank you. I'm experiencing some minor technical issues. So my camera's not working remotely, but the key is that you can hear me, and my presentation will be shared by Richard. So thank you, and good morning, everyone.
I hear you. I will share your presentation. Erik-Jan, if you mind switching your camera off, please. So we have the presentation full screen. Thank you. Sean, you're on.
Okay, good morning, everyone. And Richard, thank you. And also thank you to Kay for this opportunity to present during this first Surety Week. This is quite an exciting event with a very interesting agenda, and I'm very honored to be here to present as part of the opening ceremony. As I prepared some research around my opening comments, the number 5 kept reoccurring as kind of a key theme. So you'll see throughout my presentation that the number 5 really plays an important part in our industry and my presentation. And by way of just, I guess, a brief background, I've been in the industry now for 28 years, been working for Euler for about 5 years, extensive experience in the industry, working across both the US and Europe, and also involved in global markets for many years. And really a pleasure to be here to present some insights and really open up the Surety Week. So with that, if you could please move to the next slide. I thought it would be good to start with global trade, really, as a key indicator for our industry and the outlook. And what you'll see here is that going back to 2020, during kind of the start of the COVID crisis, we had quite a contraction in global trade. This is no surprise. The good news is that we had quite a bounce back in 2021, significant bounce back, and very pleased to report that based on research from our economic research team, the Allianz Economic Research Team, we're expecting 5.4% growth in global trade in 2022. So the outlook is quite positive. Really key industries that will drive this really are energy, electronics, machinery, and automotive. These industries are expected to outperform this year. The other key industry that I should mention, as highlighted by the picture on the left of the crane, is construction. Construction is a very important part of our surety business. It represents about 50% of our global business. So it's a key driver of our business. We obviously have many clients that are heavy users of bonds and guarantees. And the outlook for construction is also quite positive. And it really, I think if you look back at the COVID crisis, we were expecting, I think, a greater negative impact for construction in many of our clients. And I think what we saw was that our clients were, for the most part, quite resilient and also supported by their governments in many respects. But I think the construction industry as a whole performed fairly well throughout COVID. Last year was a nice bounce back, and we're looking for further recovery in many of our major markets in 2022. I guess just to note a few of those markets, the US, of course, is one of the largest surety markets in the world. There's, more than 50% of that is really surety-related business or construction-related business. And with the recent passing of the infrastructure bill, the 1.3 billion infrastructure bill, we expect this to really accelerate growth as we go forward. We're expecting less impact in 22, as many of those projects are rolled out and let. We see a bigger impact in 23, but that should provide a nice boost to growth in the US surety market for the next few years. I think in Canada, the outlook for construction in the the Canadian surety market is quite positive as we go forward, expecting growth there probably in the 4 or 5% range. And the same goes for many of our key markets in Europe. The largest two markets in Europe are Germany and Italy. Germany has quite a positive outlook with between 4 and 5% growth in 22 and 23. Construction being a big part of that, although I think electronics and machinery are also key drivers for the German economy and also for the surety market there. And then finally, touching on Italy. Italy is also a very large market, surety market in Europe, and we're expecting very positive growth in that market, also supported by a large government-funded infrastructure bill that will support that. We're also seeing a trend in Italy of sureties taking over more market share from banks. So this is very positive, and we hope this will continue as we go forward. So really, those are, I guess, some key opening points around this slide. I will mention that there will be, of course, several discussions this week as part of the Surety Week around growth expectations. For one example is the emerging market presentation on Thursday. Will you get more insights around this? But overall, it's very good to see a very positive outlook and a good post-COVID recovery. I guess the final comment to make before moving on to the next slide is that COVID has definitely changed the way that we work, not only in our own companies, but also in our industry as a whole. And this has really led to, I think, not only us, but many industries looking at digital transformation as a key theme and a key part of our business models. So with that, I think that's a good segue into my next slide around digital transformation. And if you look at the left-hand side of the screen, the 75% increase in e-bond, electronic bond issuance over the last 3 years is really a statistic from my company, Euler Hermes. So we've seen a very large demand in e-bond usage, which is really encouraging. So I think COVID has been a key accelerator for this. It's something that we as an industry have been pushing for many years, but also it's something we need our clients and also our beneficiaries to embrace. And I think with the lockdowns and the remote working environment, this really forced companies and beneficiaries to embrace this. And so we're very pleased to see a much broader usage of electronic bonds over the last few years, and we expect this trend to continue. I know from talking to many others in our industry, they're also seeing a very positive increase in e-bond usage. So this trend is gaining momentum and should continue as we go forward. I think if you look at the right side of the screen, it talks about the cost savings. This is from a PwC study that was performed on the Guarantee Vault. And the Guarantee Vault is a digital platform that has originated in Germany between large insurance companies and banks and also major clients, also involving beneficiaries that will be a completely digital platform for the issuance and management of bonds electronically. And so this is just one example that we're part of and others in the industry are part of that I think is emerging. And I think we'll see several examples going forward of other platforms really becoming more the norm. And it just goes to show this is something that we as an industry need to embrace. This afternoon, we'll have a session on how digital and new technologies will continue to shape our industry. So I won't go into too much more detail here, but you clearly see that there are benefits to moving in this direction. Besides the efficiency gains, there's clearly some cost savings. And based on this PwC study, they're estimating a 68% reduction in costs for clients and a 43% reduction in costs for beneficiaries. So it really shows the cost savings could be quite prevalent as we go forward with these new platforms and these new ways of doing business. And I think if we, as a final note, if we don't take part in this and our clients are moving in this direction, we're certainly going to lose business. So I think we need to embrace this as an industry and start moving in this direction. Here's the final comment to make, talking about the future. Let's have one final look at the next slide around the number 5 that will impact us. And this is around the 1.5 Celsius max temperature increase that we're aiming for as an industry. Sustainability has become a central topic in all economies. It's something that really all external stakeholders, from customers to competitors to investors, and also the broader public, including shareholders and employees and supervisory boards, and also external stakeholders, including rating agencies, analysts, regulators, etc., are very focused on. The climate transition is really top of mind. The main goal, of course, is to make sure that we have no net CO2 emissions by 2050 to really limit global warming to a max of 1.5. This is a major challenge for us as an industry and for all of us in all economies around the world. But I'm really pleased to see the momentum around this topic that's been gaining over the last few years. There's been significant investment in this space. I saw a recent study that there's 130 trillion of private capital that's supporting this transition. 130 trillion. Once again, just to give you a sense of the magnitude of the capital that's being used to support towards this aim of net zero emissions by 2050. And this will continue. So these investments in capital and this transition will continue. And we as an industry have to make sure that we shape this and support our clients to move in this direction. This is really key. And I do think that while we have this challenge, we really need to look at this as an opportunity to be innovative, to develop new products, to work with our clients to shape the future of our industry. And so I really see significant opportunities coming from this space. On the slide on the right here, we have several sectors that are obviously involved in this, ranging from building, transportation, industrial, and electricity, and of course energy. So we have several industries involved. I've also seen in several of our major surety markets around the world a big uptick in usage for bonds in the sustainable or renewable energy sector. So this is quite encouraging, and I think this will continue to be a big growth area. And I think from what we've seen the last few years, we've seen this already be a big growth part of several of the surety markets that we're in. So once again, we as an industry need to embrace this, be innovative, and find ways to develop new products and ways of supporting our customers, and really make this a big opportunity for us. There will also be a panel discussion tomorrow on sustainability and surety that will shine much more light on this very important topic. So I won't go into any more detail, but I do look forward to that session and hearing from the experts. But turning to my final slide, and you'll probably have guessed it right, but I have 5 key takeaways here. Just to wrap up the session, once again, global trade will continue to grow. Outlook is 5.4% in 22. I should mention, based on our economic research team at Allianz, that of course, while we're estimating this level of growth, there are some headwinds. Of course, we have some serious global supply chain disruptions. We have the possibility of China economy not rebounding the way we would like. So there's geopolitical challenges as well. So of course, these all things need to be taken into account. But overall, we still see a fairly positive growth outlook in 22 and beyond. And of course, surety as a sector our surety as a product is really a line of business, really should contribute should be able to contribute to this growth from these key sectors that we provide bonds for. So this is quite exciting. I also think the digital transformation that's underway will continue to be a key accelerator. And I do expect e-bonds and platforms to really continue to be a key part of our business going forward. Once again, on the ESG front, this is really critical for all of us. So I can only encourage you to embrace this as an opportunity and to really look to develop solutions and products around this for our clients. I know it's not easy, but I think it's something that we as an industry really need to focus on. And I'm confident that we will we'll step up to the challenge. And then finally, there is a very positive outlook for our industry. But once again, we need to see this as an opportunity and not just as a challenge. And we need to continue to work very hard to differentiate ourselves from banks. And I think we're already seeing that in many cases. But there's some real benefits to using surety bonds over banks. And I think it's something that we as an industry and also ICISA, as our key association, needs to help support with this to make sure that we continue to gain market share from banks and continue to grow our business. So I think with that, I see several questions coming in, which is quite encouraging. So I will close the formal part of my presentation and we'll go right to the Q&A.
Sean, thank you very much. And I'm sure we've all learned something, just like we've learned how to get along with teams in a setting like this. But first, questions. There is a question for you if there are any plans from Unit Hermes to offer surety in South Africa and/or Africa at large.
Currently, we offer bonds in Africa at large, but primarily for large corporates, whether in Europe or in the Americas. So that's been our primary focus. We have a very large banking network. Banks are the predominant type of guarantee that are accepted. So, and bonds from insurance companies are rarely accepted in Africa. So we've been using a very broad bank fronting network to service our European and also American and clients from the Americas that require bonds in Africa. But in the short term, we're not looking to set up local operations in South Africa or anywhere else. Given the local dynamics and characteristics, we don't really see the scalability to make it a successful business model for us in the short term.
Clear. Thank you very much. There are a number of questions on the ESG topic. The first one being, nuclear power is now categorized as green by the EU. I suppose that means. Do you support bonding for nuclear power projects?
I mean, to date, we really haven't been presented with any opportunities in this space. And we have quite a large client base with many clients active in that sector. So to date, we have not. I think it's something that we would be open to. Clearly, there's a lot of different underwriting elements that would come into play here that I think we and also the industry would need to get our arms around to make sure that we're comfortable with supporting these types of contracts, including, of course, insurance and other legal liabilities that would be in place. But I do think it is will continue to be. It will play a role in the future when it comes to the energy space, and it is something that we as an industry need to tackle. I do know in very selective situations in the U.S. market, some U.S. sureties have looked at this, and I think have successfully in a few occasions been able to bond nuclear power plants under certain limited conditions and circumstances. So it is something I think that we can look at, but we need to look at the underlying terms and conditions very carefully to see if this is something that would be suitable for us.
Thanks, that's clear. Another one, topical. Inflation is growing across markets. How do you expect this to impact the surety market in the next couple of years?
I'm not sure if I quite follow the question, if it's around information exchange or just how we as an industry make sure that we're up to speed with the massive amount of information that's exchanging hands, Richard. So I don't quite.
Sorry, I wasn't clear. This is about inflation.
Oh, inflation. Okay. Can you repeat the rest of the question, Richard? I didn't hear it. I'm sorry.
So there were two questions basically on the same topic.
Okay.
Inflation is growing across the market. How do you expect this to impact the surety market in the next couple of years? And to be more specific, the other question, isn't there a negative impact on construction to be expected from strongly rising energy costs, material costs, especially wood and aluminum, and labor shortage? Should we not look out for contracts allowing for adjustable prices?
Okay, thank you, Richard. That's clear. Yeah, I mean, both questions are quite interrelated. I mean, clearly it's something that we, and I think the industry, inflation is a key topic on our minds, and it's something we're also working, I know we're working with our economic research team. Allianz has a huge economic research team that we have access to look at the trends for inflation and where this is going. So this is clearly something that we're very focused on and how it will impact our clients in the various sectors and industries. So it is something we're following very closely. I think the industry is following it. I think when it comes to our clients and on our portfolios that we're managing, it's clearly a very hot topic. It's something we're discussing with clients on a regular basis when we meet with them to see how they manage this risk. When we have new bond requests, clearly we're looking at the terms and conditions to see if they do have the ability to have price escalations built into the contract, and if not, how they will mitigate this further, either through additional provisions or adjustments in total contract price. So it is a really key topic for us as an industry, and it's also a major risk that if we don't manage it carefully with our clients, it could lead to an uptick in claims in the future. So it is something I think we as an industry need to take very seriously and be very proactive with our clients, and also with our brokers in cases where brokers are involved, to make sure that we're managing this the right way. So it's, at least from our perspective, it's a hot topic. I expect it to be the case for many of our competitors as well, to make sure that we manage it the right way.
Now, to stick to time, there is a related question on central banks increasing interest rates and the effect on the loss ratio of the industry. I will convey that question to you so you can answer it later. Same with a negative demographic trend in Europe. Just one last question, if we may. How banking capital requirement regulations could help insurers active in surety? How do you see that? Do you see an opportunity?
Richard, you were breaking up. I only caught part of the question. Could you please repeat that?
So the question is, how can banking capital requirements regulation help insurers active in surety?
It's a very good question. I mean, it's something that we're looking at in certain countries now with the support of some consultants to look at to see with these changes that are taking place, how we can as a company can better capitalize around this. I mean, we're in the very early stages in this topic. In fact, I have coincidentally have a meeting with my team this week, and this is one of the agenda topics to get more insights around this and where we want to go with this. So I think it's very early stages, but I think there is an opportunity for us. I really can't go into any more insights from my end with any great detail in terms of specific opportunities at this stage. But I do think as an industry, if we handle it the right way, there will be opportunities for us as an industry to accelerate our business and also, let's say, win more business from banks. Clearly, the pricing element that ties into the capital element is key. So this is also something that we're looking at very carefully.
Cool. Let's end on this optimistic note. And thank you, Sean, again, to set out very clearly where we are and mostly where we are going. Thank you so much. Now, we will have a session this afternoon, 3 CET, which is 2 in London, 9 a.m. Eastern time. And I'm afraid the friends on the West Coast are going to have to get up really, really early. Now, in Asia, it'll be 9 in Seoul and Tokyo, 10 in Sydney, and 1 a.m. in Sydney. So if people want to stay up for that, we would be very flattered. If not, we have recorded the session and it will be on YouTube. After the Surety Week has ended, we will send you a message how to access these, so you can alert your friends, your colleagues, if you found this very interesting. With that, we have just done the first session of the ICISA Surety Week 2022. I hope we've all learned a lot, and I hope to welcome you back at 3 p.m. or alternatively at one of our other sessions. Thank you very much.